What do Assore, Sasol and BHP Billiton all have in common? They were amongst the worst performers in 2014 on the JSE All Share Index. This is Tonight. I'm Bruce Whitfield, and tonight I'm joined by Joseph Busha. He's the Managing Director of JM BUSHA Investment Group, Nic Norman-Smith from Lentus Asset Management, and Cannon Asset Management's Chief Investment Officer, Dr. Adrian Saville, who was reading self-help books over the holidays. He thought to himself, the term metrosexual is so last year, he's going for 2015 being the year of the lumbersexual, and hence the beard. We'll find out whether or not there's any value to be found amongst the worst performers of 2014. Should we be buying any of the falling pianos, Joseph, of 2014?
I think it's very difficult. If you look at PEs, some people say, well, these are now very cheap. So if you look
these
at
two guys, the value managers of the world, would tell you that these shares are all incredibly cheap.
Well, if you look at Sasol, really, I don't think the worst has come to pass for oil prices. So I would be basically kind of aiding, not outright buying of Sasol, because there's still a bit of negativity around the oil industry currently.
Okay, but amongst those fallers, we've got Sasol amongst the big fallers, but then we've got ArcelorMittal, which has been a perpetual dog. Construction sector helps populate the bottom of the table. Group 5 is in there, Avenge is in there, and others as well. And then, of course, the resources shares, African Rainbow Minerals, Impala, Kumba Iron Ore, Lonman PLC. Is there anything in the bottom 10 of 2014 that you would go anywhere near, Nic?
Yeah, absolutely. You know, the lower the share price goes, the lower your risk goes. Although some of the academics seem to think otherwise, but quite frankly, the cheaper something is, the lower your risk of capital losses.
African Bank, some, yeah, okay.
Absolutely, but you've got to understand, and of course, you don't buy something just because it's gone down. Ask anyone who bought US banks after they were down 50% in the crisis. So yes, you need to understand that business. Is it going to be around? Is there going to be a demand for its products? Is it well capitalized? Or is this business model fundamentally broken? So looking at those stocks, something like Impala Platinum, are we going to need platinum? Absolutely. Is there a massive global oversupply? No, we can only get it in one portion of one continent, being Southern Africa and some in Russia. Good demand, not a lot of oversupply, lot of negativity, which means a lot of that negativity is in the price and clearly has been for a while. So that's something we like a lot.
There. I want all three of you to pick three of the bottom 10. I want to see if there's any correlation amongst them toward the end of the show this evening. Adrian Saville, we look at the bottom 10. You are a resources bear. You maintain a resources negative position. You've got a portfolio that you run called Super Dogs, which, as it implies, unloved shares. There are very few shares less loved than resources right now, but you wouldn't take any of them.
Yeah, the Superdogs portfolio is constructed specifically to exclude resources, so that's not a call on resources.
Call on resources, okay, yeah. Very good.
And just to, I suppose, step back and give some air to our position on resources, is it's an incredibly difficult place, I think, for all investors because of the vulnerability to just a small number of incredibly hard to predict elements, currency and commodity. Try and if you get one of those two right, I think you've done extremely well. To get both would approach a miracle. So you are, I think, in a tough space always when you're working with resources as an investment.
To Nick's point, though, that your risk diminishes as prices decline, it's a solid argument, and it's one that you would surely agree with.
Absolutely. And to take a case in point, a business like Kumba, for the first time in a decade, is trading at less than net present value. And that's using some extremely conservative assumptions. You can buy into Exoro, which gives you exposure to Kumba at a discount. And that too is amongst some of the heaviest fallers. In fact, if you take the All Share Index 160 stocks, about 50 of them generated negative returns, and of that 50, 3/4 are building, construction and mining companies.
Okay, so 2014 was a pretty horrible year, particularly for construction and mining companies. The question is, do you go anywhere near them? We've got Impala from Nic Norman-Smith so far. What will your first pick be out of the bottom 10?
Well,
if there are three that you prepare to take, in fact.
Sure, and I've made reference to two of those already, Kumba and Exxaro.
You can only choose one of them because one is kind of a proxy for the other, so make up your mind.
Then I would take Exxaro, which is...
it's not in the bottom 10 strictly, but was a lousy performer.
Close enough, I'd venture.
Okay, so Exxaro would be on that list. What about you, Joseph? Where would you go?
Well, you just taken out all the stocks I wanted, which is
you like
Billy's and Sasol, but they're not in the bottom 10. No. So if I have to stick to that, I could go for Group 5.
You go for Group 5. Now, why Group 5? Construction sector, massively unloved. The finance minister, his predecessors have for years been talking about great infrastructure projects, no doubt. And Nhlanhla Nene will do the same in his budget speech toward the end of February. But nobody actually believes that anything will come to fruition because, frankly, he's got more emergency measures to throw money at this particular budget.
No, I agree with you. I think if you look at the construction sector, all the stocks have taken a massive hit after 2010. You know, you saw that all the shares obviously had a massive rally prior to 2010, and now obviously there's nothing in them. They have to start building their books, but also if the government have to stick to NDP, our belief is that, you know, some of the stocks have to reprice.
Investing on policy promises, that's quite high risk.
That's very, very, very hard to follow. I agree with you. But ultimately, I think infrastructure is quite important, given obviously what's happening with Eskom and some of the government service delivery, really. So the socio-economic environment of the country really depends on service delivery. So I believe that, you know, apart from the collusion they are accused of, and obviously that's still hanging on some of the construction stocks. So I would really pick possibly Group 5.
Okay, Group 5.
Just
would you take your barge pole and put it anywhere near a construction company, Nic Norman-Smith?
I would.
But it wouldn't be Group 5?
It wouldn't be Group 5. It would be Avenge. That's just that's our pick. I think it's important to consider, though, when you look at these businesses, you've got to understand it from a qualitative point of view. So a construction company is not the highest quality business. Now, when I talk about quality, I talk about barriers to entry, the level of competition. Yes, there's some scale that's required to build these mega projects, but at the end of the day, it's not that hard to start a construction company. It's a heck of a lot harder to start a competitor to Coca-Cola. So what you do there is you do position size accordingly. So yes, these stocks are cheap, but you do, part of your risk mitigation is how much capital do I commit and how big a discount do I ask. So I'm going to only invest in these when they're trading at big discounts, which they are right now, you know, all at quite big discounts to book value. You know, what that book value really is another question. But
Adrian Saville, construction?
Yeah, Bruce, I would definitely put an argument in for a construction firm. Our preference is for Wilson Bailey. So you've got three there.
Okay, well,
there we have a market.
This is so nice to narrow it down. Thank you.
And I'll argue it's not one of the largest fallers, but our favour for Wilson Bailey is caused by a couple of attributes. The first is, whilst I agree with Nick's observation, the barriers to entry are low, it's a tough industry, margins are thin. Wilson Bailey has demonstrated over the years it is a superb quality business.
But it is kind of outside the rules again, Adrian. And
so we have to go inside of the rules. It's got to be one of the biggest fallers, then I would choose Group 5.
You would choose Group 5.
Yeah.
If we get a little bit of correlation on the bottom 10 performers, then it's quite interesting. So we've got 2 for Group 5. What about you, Joseph, on your second pick? You've gone for Group 5. Out of that bottom 10, is there anything else? You don't have to take 3, by the way. Yeah. You're welcome to opt out and say the rest are dogs. I'm not going anywhere near them.
Well, they're actually dogs, really. But, I mean, if I'm pushed, possibly I'll go for Kumba.
You'd go for Kumba as well? All right.
Yeah.
Well, and why not use Adrian Saville's backdoor on Exxaro for Kumba?
Well, Exxaro, I'm not quite sure, obviously, how much they've done in some of their deals in DRC and so on. We looked at their books. They've been on a capital raising for a while. So from our valuations model, I mean, the entire last year, they never went up above 130 Rand, and obviously just took the knock. I know they're trying to export coal now. To improve, obviously, from their captive market of Eskom, but we just don't like it.
Okay, you don't like Kumba directly, but Exxaro. Exactly. So, but you will take Kumba. Nic Norman-Smith, is there another share in the bottom 10 that you would go for?
Nothing that really jumps out to me. I think you know, something like a Kumba is clearly a lot more attractive than it was a while ago.
Attractive enough.
I do think that when you're starting to look at if we look at the fundamentals of the underlying commodity, as Adrian mentioned, it's really important to analyze it. And platinum, I get concentrated supply, demand relatively broadly geographically. I look at an iron ore, mostly correlated to China, who's done quite a large amount of the building. It's a massive punt on China. And there's a huge amount of supply coming in, quite low-cost supply. So people, as we've seen, are going to carry on pulling it out the ground. You've got an Anglo-American, Minas Rio's just come on stream now. So I think rather than just buying it broadly, I'd avoid those. I think you can get exposure in other ways. So it's outside of this, but an Anglo-American, you get some exposure to a Kumba.
We're focusing on the bottom 10. You're happy to take with just 2 shares out of the bottom 10. You won't use up your allocation. Just Impala and Avenge for you. What about you, Adrian Saville? Do you care to go any deeper into the bottom 10?
Yeah, I'm going to play a third card, and my preference would be for African Rainbow Minerals.
Now, that's an interesting one. Okay.
I think that associated ore is the biggest faller in the last 12 months, or in 2014, falling almost 60%. Over the decades that associated ore has been listed, I think it has demonstrated itself to be one of the most shrewdly run resource businesses in this country. And through African Rainbow Minerals, you get exposure to associated ore, and you also get a raft of other really nice quality assets, including some gold exposure, some platinum exposure, some copper in Zambia. So you get a nice diversified portfolio, and the rump of it is this really high quality Assore asset.
Okay, and I mean, it lived up to its name, didn't it? Because it really did bring up the bottom, did Assore. So cheap. You're so dignified calling it associated ore, and lower the tone. Joseph, you sticking with 2, or will you go for 3?
I'm going to stick with 2.
Okay. All right. Now, what's interesting about this is not a single one of you has gone for ArcelorMittal. You just don't see any opportunity there. Nobody's gone for Adcock Ingram, despite the Bidvest opportunity there. Why not? Why not Adcock Ingram?
Well, I think after Mr. Branjofi obviously overtook and blocked CFRI from getting that, we do not see much story to say, how are they going to create value, basically for Adcock shareholders.
And it's a bigger mess than even Branjofi thought when he bought it.
I just don't think it's cheap enough yet. I think there's a good story there in terms of there's a massive amount of capacity that needs to be utilized. They've got a whole lot of great new sort of plant and warehousing and distribution. But so we're saying, okay, what's the story? Well, they're going to start utilizing that. Well, they've just had the latest ARV tender, and they hardly took any of it, so they're not filling up that capacity. Maybe the margins were just too bad. But
we must leave it there. But thank you, gentlemen, very much for coming in this evening. It's good to see all of you. So the ones that didn't get any votes this evening, we did not get a single vote for ArcelorMittal. We also didn't get one for Adcock Ingram or for Lonman or Mixed Telematics. And Assore sort of got the back door, Adrian Saville going via other companies to get into these businesses. So interesting. So tomorrow night, I'm going to ask these guys to come back because they're very generous with their time and don't particularly like their families very much. So they'll join us again at 9 o'clock tomorrow. Joseph Busha, the Managing Director of JM BUSHA Investment Group, Nic Norman-Smith from Lentus Asset Management, and the Cannon Asset Management Chief Investment Officer, Dr. Adrian Saville. Thank you so much for watching. There'll be more tonight, tomorrow. Till then, good night and goodbye.